Sure, I haven't. I actually, yeah. So the Indian market, for me as a US investor, I would have to come into a P note and all of that, and that's just cumbersome. I think the second is that the Indian markets are quite different from the US markets in one sense, in the sense that I hardly ever, basically almost never meet managements. I hardly ever visit businesses. I basically, you can call me an armchair investor. So I'm really not interested in, going and understanding the people by meeting them and all of that. In India, if I were to follow the approach I follow in the US, I think I'd get my head handed to me because, the opportunity in India. So if I were an investor who focused on India, I would focus on businesses that had major growth ahead of them. Businesses that can do a 10x or 20x in 5 years or 10 years. Significant growth. And there are many, many areas of the Indian economy that have that potential to have that growth. So it almost becomes like private equity investing or venture capital investing if you want to do that. And so in fact, if I were investing in India, I would not want to be restricted to public market. I would have a fund that would allow me to do all of the above: private, public, real estate, anything that I want to do. So I would set up a different structure. And if I wanted to do that structure, I could not do it armchair investing. I would have to be able to handicap the nature of management and all of that. And I'm able to do that in the US because the businesses I invested in have very long histories. And the managements have very long histories. And in the United States, I can make almost a definitive statement that is the probability that I lose money on an investment because of fraud is pretty close to zero. In fact, I can't think of a single case in the past, 18 years as an investor that I've lost money on an investment because of fraud. I have lost money on investment because of my stupidity, but not because of fraud. In India, I could not make that statement. So there are plenty of very high quality entrepreneurs. There are plenty of low quality entrepreneurs, and you'd have to sift them out. So my biases are that I like to just sit in an armchair. And my wife will tell you he doesn't work at all. And I have no interest in, kicking the tires and going and meeting businesses and trying to figure out, basically, the venture capital approach is you have to forecast ahead without too many tread marks behind you. And that's just not a game that I either would be good at playing or even have an interest in playing. So I think that the Indian markets, I'd have to move here to do that. I'd have to be the only thing I'm doing. So there'd just be a number of structural changes that I'd have to make that aren't that exciting for me to make. So those are the things. So actually, I have no Indian stock tip for you because I have really not followed the Indian markets. But what I would suggest is you can do the same thing, which is to the extent that Indian markets require disclosure, you should find out who the good investors are and look at what they're doing. So I can tell you some names of people I admire in India. I think Chetan Parekh is very good. I think Amitabh Singhi in Delhi is very good. I think that I think the Dalmia brothers are very good. So these are just some names I know about. I think so if you track some of these guys, there probably are many more of them. Then that might be a good place to see what they are doing and then figure it out. So.